Here is the easiest way to compare mortgage companies when they present you their offers on their loan estimate. So here's two loan estimates side by side. It's going to look like a lot when you first get it if you are not familiar with this document. And I'm going to simplify this as much as I can to see what is the best option. Now, these are two comparable ones because they have similar interest rates. So this will be a little easier to compare. But if you have ones that have like more discount points and a bunch of lender credits and different rates, that would be a little more in-depth detail as far as with those loan officers. But this will at least give you an idea on how to compare and ask questions with your loan officer. So here are two loan estimates side by side from different companies. And this particular one is a VA loan. Uh, and I'll eventually do maybe a conventional one and an FHA as well, so you can see that. But in particular, here's a client of mine that was shopping. That's what you should do, is shop around with different mortgage companies and make sure you're getting a good deal, and then to make sure that they're also very knowledgeable in what they're going to do with your home buying. So how you can compare this, I broke it down in these red squares. You're going to look at the first at the top right. It's going to be the loan term, purpose, product, the loan type, and then if the rate is locked. And you'll see in the top right of each document, 30-year, make sure that they have a 30-year in there. If that's what you're wanting to do, make sure those two match. Make sure that they're both for a purchase, or make sure if you're doing a refi, make sure it's both for a refi. Make sure that the product is a fixed rate, unless you're doing what's called an ARM, it's adjustable rate mortgage. I won't get into that, but just to make sure that you are getting a fixed rate that's not going to change, it's going to say fixed rate. And then the loan type is, in this particular scenario, in these two comparisons, the box is checked for a VA loan. So that's how you're going to make sure that you are, if you're maybe considering doing conventional or FHA loan or conventional or VA loan, that could be a possibility. So just make sure that they have the right loan product down for you as well, because the rates could also change with that as well. So make sure you got that compared. The rate lock, you'll see on this comparison, the one on the left, that's showing that the rate is locked. That means the lender has secured that rate with your application, and it's not going to change. It's not going to go up. Could possibly go down depending on the lender's renegotiation rules and everything, but it's at least not going to go up unless there's like a certain circumstance where maybe you are putting a different down payment down, or maybe during the long process of going through that, they had to repull your credit for some reason to a new credit score. As long as they have a viable option as far as why they have to change your credit score, it will not change. And then on the top right one here, you will see that the rate is not locked. So that is subject to change. So whatever you're getting here, that interest rate could change, and it will change. It could change in the next hour, it could change in the next day. Rates do change daily, but they could also change multiple times during the day if the market is very volatile. So that's how you can compare there. The second box here, you want to make sure that you have the same loan amounts, because again, different down payments could result in better rates or worse rates. So that's always a thing to make sure when you're comparing, is to have that done. And interest rate, I've already gone over that. This left one is locked, so that one's not going to change. The one on the right's not locked, but maybe they could lock it in the next hour or so after you got this document. In this case, the rate is a little bit better on the left, but it's not a whole lot different as far as the monthly payment and savings. So as far as these two companies right here, you can see it's basically the same rate. So if it's the same rate, we want to see what else as far as closing costs are going on to see who has the better deal. And then with this, you'll see that I forgot to point out one last thing, is the sales price. Make sure that the sales price is the same as well. And then also this third box here in the middle, the big one, that is the payment breakdown of the entire loan. You want to make sure that these are pretty much the same, especially that estimated escrow account. That is making sure that both companies are putting in the same amount of insurance, home insurance. That's something that you're going to choose, but you want to make sure in the estimate when you're comparing, because it's going to come up in the closing costs, but you want to make sure that they have the same home insurance estimate and the same exact property taxes. And that lender, that loan officer, should be able to look up on that property and see what the exact property taxes are. If not, they might not know what they're doing. So in that case, that's a good indicator as far as seeing how well your loan officer is if they can look up property taxes and get that exact. You'll see in the next box down that escrow amount. You'll see here the total monthly payment, $229.93 and $2,300. That's roughly the same. In this instance, it's just a little bit different because it's a slightly different interest rate. And then he'll show the breakdown as far as what's in the estimated escrow. That's for taxes and insurance, $226. Those numbers are the same. It's just showing that they're including property taxes and insurance in that escrow that's included in your mortgage payment. I would skip at the bottom here the estimated closing cost. That's going to be a little misleading, and I'll get into that here shortly. But that's going to be a little misleading as far as what is actually the true better deal in closing costs, because both loan officers or both lenders could have this loan, this estimate set up differently. So estimated cash to close, this will give you a rough estimate as far as what you'll be needing. You want to make sure that they have the earnest money deposit in there. We'll get into that, but this will at least give you a baseline as far as what's going to go on in the second page here. Okay, and then here on the second page, we have the total breakdown of all the fees and how they compare side by side. So, we got both loan estimates here side by side just to compare apples to apples. It's the same format, and here's how you can compare the differences in these fees. Well, let's start off with the section on the left here, the left estimate. You will see at the top left, A and B. Those sections right there are the sections that you want to really pay attention to find out what is the better deal. And then maybe a little bit as far as checking out what's on the bottom right and those red squares there. But section A and B is really going to give you a clear indicator as far as what is the better deal if you have a similar interest rate in the first page. And let's just start off with section A. That's the lender fees. So top left, you'll see is the underwriting fee for $1,055. And that's pretty standard for all mortgage companies. They're going to have typically a fee like that of around $1,000. And then you'll see as far as the right option, section A, they have an origination fee. That is a fee, I would compare it to the underwriting fee. It's pretty much the same thing. In their case, it's $3,463. And that's quite a bit different. It's over $2,400 or so as far as the difference there. They also have an additional 1.95% of loan amount points. Now, what that is that is discount point fees. The discount point fee is an extra fee added on from a mortgage company to basically make more money. And typically when you see that is because they are giving you a lower rate. And when they get a lower rate, they make less money. And when they make less money, they're going to add that fee in there to make sure that they're making the same amount versus if they got you a higher rate, like the going rate. So like I would say the option on the left, that's like their going rate because they have no discount point fees included in there. So option on the right, they're charging more in fees. In this case, between the two, pretty much the same interest rate. But look at their section A, just over $1,000. The total on the right, just over $10,000. Quite a bit different, and this is why you need to compare apples to apples with this format here. As far as in section B, those fees on total are roughly similar. Those will vary just a little bit. In this case, it's a VA loan, so the VA funding fee, that's got to be displayed as a closing cost fee. Sometimes VA members can get exempt from that depending from the VA benefits as far as determining that. In this case, the VA funding fee, 99% of the time people just roll that fee into the loan amount, and that's an option there. But in this case, they're pretty similar in fees. So we're still about $9,000 higher on the right side. On the right side, when we're going to these bottom right sections here, you'll see the lender credits. The left side has nothing in there as far as lender credits. A lender credit is the opposite of discount point fees. So again, discount point fees was to charge more, maybe to get a lower rate. But it's basically more money for the mortgage company to make on the loan. You'll see on the left, no discount point fees. Top left in section A, no lender credits. That means that they're just giving you the going rate today. And then on the right, they're charging all those discount point fees up there, as far as about 2% of the loan amount, but they're also giving you a lender credit. So the lender credit on the right, that is about almost $5,500. So it's a little weird how they kind of offer this to the client. And really, to this particular client, when they said the right one was the competition and that they were shopping with, and they told my client that on the right side in their offer, hey, we can get you a lower interest rate. We know you're shopping around. We're going to lower the rate to this, and then we're going to also chip in to help out with some of the closing costs as well. Well, they didn't really disclose, or I guess they did disclose on the top of Section A with all those points, but they didn't really say over the phone to the client, hey, I'm going to help you out with a lender credit and compensate for some of the closing costs for the lower rate. But hey, we're actually going to charge you more in discount point fees on the top. It was just kind of a selling tool, which I don't agree with. Really, just it's becoming more salesy at this point instead of just really providing the value to the client. So, and then the bottom right under the calculating cash to close, you'll just want to make sure that the down payment matches between the two options. In this case, it's $0 down because it's a VA loan, and the VA borrower, they are able to take that benefit and put 0% down. And then you want to make sure that the deposit, that's the earnest money deposit that you put down when your offer gets accepted, and that you state that I'm going to put down X amount of dollars. Typically, I would say industry standard, at least in Indiana, is 1%. So in this case, this person put 1% down, which is actually going towards your down payment, or in this case, it's going towards his closing costs. So one thing you want to check too, this case, there's no seller credits from the seller. That's like if you are asking for the seller to pay for some closing costs. In that case, or in this case, there was not any seller paid closing costs. Another thing you'll want to notice here, adjustments and other credits towards the bottom right. The left one has $0 on that one. The right option has almost $1,200 in a credit, taking off that cash to close number. This is, in this case, was the taxation credit. That's taxation credit, again, is what the seller owes in property taxes from basically the closing date leading back to like the past year or so. That is something technically the title company is the one that determines that amount. There's calculators online that you can help determine that. Typically, the mortgage company is not really supposed to disclose that or anything. They're not the ones determining it. So leave it up to the title company. But in this case, of the option on the right, the people that they were shopping with, they decided to put that in there. That helps make their cash to close number even look lower. So you'll want to really look out for that when you're comparing, is just making sure what does those numbers actually mean, or what is that for. So in the case, really, with all that, the option on the left, still the cash to close is much lower than the option on the right, even after kind of finagling all those numbers. But that is how you can compare apples to apples as far as that goes. The other sections on this page, as far as section C in the bottom left, the title company, you'll notice, the option on the left that has some higher fees than the option on the right. I would say the option on the left is a little bit more legit as far as what the fees would probably be. But ultimately, what it's going to come down to is who the title company is being used in the transaction. And a lot of times that is determined by you as the buyer, or maybe you as the seller, or maybe your realtors are just deciding on which title company they recommend to use. And that title company, they don't typically have fixed rates or anything as far as their fees go. So a lot of times it's going to depend on the price of home that you're buying. So that's where the mortgage company on these loan estimates, unless they have actually collected the fees from the title company and gotten a good estimate, they are not probably going to be accurate. So that's why you don't really need to pay attention to that, but you need to pay attention to it on the right option if they're putting a lot lower fees in there to make their closing costs look better on the loan estimate. And if you go to the top right, section E, that's pretty standard as far as the state that you live in. In the state of Indiana, they're pretty cheap. Yeah, I know like in Florida, that section there could be a lot higher. So, don't really pay attention to that. But make sure that when you're comparing two estimates, that is the same. And then section F, you know, it's important to know. I mean, make sure that they have the same amount of prepaid interest in the section F there, and then under the prepaid interest per days. That's depending on the date that you close during the month. You also want to make sure that they had the same or pretty similar home insurance amount, which these two are not the same, but they're pretty close. Um, and then as far as section G, same thing. You want to make sure that they have the same property taxes in there. A loan officer and their team should be able to look up the property taxes and find out what exactly they're going to be, or maybe what they were like a year or two ago, and be something very, very close. So you just want to make sure that those are the same, and everything like that. So that is basically how you can read as far as comparing the two loan estimates and figuring out what is the better deal, or figuring out what you need to maybe ask the other lender as far as adjusting these numbers, so it makes it easier to compare what is the better deal. But as long as you focus just on that section A and section B, and then the bottom right under the lender credits, and then just make sure that bottom section, all the other credits as far as the deposits, maybe a seller credit or those other adjustments, make sure they're not just throwing in a tax creation credit just to make their numbers look better. And then ultimately that cash to close, that will give you an idea of what you'll be needing to bring to the closing table. So that's how you can compare. I hope this really helps as far as that goes. And if you have any questions as far as this goes, just let me know, and I'd be happy to answer something for you. I know I can't do a loan in every state in the state of Indiana right now in 2023. I'm only licensed in Indiana, not other states. And with that, I'd be happy to help you introduce you to another mortgage broker in your local area that can really help you out and save you money.